Micro E-mini contracts are 1/10 the size of mini contracts. That means lower risk, which is perfect if you're just starting out or testing a new strategy. Take a look at this. The same $50 move on the micro Nasdaq is a $500 move on the mini. Same chart, same movement, 10 times the dollar impact. Okay, so now you know everything you need to know about micros and minis. Bye! Just kidding. If you think that's everything you need to know, congrats! You're exactly who needs to hear the next part before it costs you your account. To explain the differences between micro and mini futures, we jump into one of the games I enjoy, Palworld. In Palworld, regular-sized pals are like microfutures, small, manageable, and perfect for beginners. Alpha pals, they're the mini futures, larger, more powerful, and demanding a higher level of experience to handle effectively. When you're battling an alpha verdash versus a normal verdash, it's like trading minis versus micros. They've got the same cute face, the same color, same movements, same attack power, even the same skills, just like the micro Nasdaq, MNQ, and the mini Nasdaq, NQ. They look the same, move the same on the chart, but the alpha verdash has one big difference, a much larger hit point pool, a lot more health. It doesn't hit harder, but it takes way more effort to take down. You'll need higher level weapons, more ammo, more powerful spheres, and more time in the fight. Same behavior, but a much more costly battle. Now think about that in trading terms. A mini contract doesn't move any differently than a micro. Same chart, same entry, same target. But it takes 10 times the dollars to give that trade room to breathe. Every trade needs a stop loss. That's your risk buffer. It's the distance between your entry and where you'll exit if the trade turns against you. With a micro, a $50 stop loss means you're risking $50. With a mini, that same stop loss costs you $500. Just like fighting an alpha with more health, a mini trade needs more dollar ammo, not because the mini hits harder or has better skills than a micro, but because it costs 10 times more to give your trade the wiggle room between entry and stop loss. That means a higher risk cost just to stay in the fight. Let's look at this example. I'm loading up two charts, one using MNQ, the Nasdaq micros, and the other using NQ, the Nasdaq minis. I'll enter a trade at the same location on both charts to show you the difference in dollar impact, even though the price movement is identical. While this trade plays out, let's take a quick look at the history behind micros and minis. Day trading has been around for quite a while. It traces back to 1867, when the invention of the ticker tape allowed brokers to track stock transactions in real time. However, back then, only brokers had access to the markets, so it wasn't something the general public could do. Fast forward to 1971, when the Nasdaq was created, making stock market information more accessible. Then in 1975, fixed commission rates were abolished, making trading more flexible. So now I have two charts up. This one's a micro trade, and this one's a mini. Same entry, same stop loss, same chart movement, same timing. Let's talk about what the charts were like before 1997. Imagine trying to day trade without a chart. You didn't have a screen, you didn't have a mouse, you had a phone and a broker on the other end of it. And if you wanted to trade, you had to call them. You'd say something like, "This is Steve. Can you place a trade for me?" "Yeah, put my whole 25 grand on it." That's right, just opening a trade could cost you tens of thousands of dollars. Then came 1997. The Chicago Mercantile Exchange, or the CME, launched the E-mini futures, which are smaller-sized futures contracts designed to make trading more accessible. The CME wanted to allow individual traders to participate in futures markets without needing the large capital required for standard contracts. It was revolutionary, real-time digital trading from your computer. Now you could click to trade, see your charts, and manage your own trades in real time. Fast forward to 2019, which was not that long ago, and the CME launched micro E-mini futures, like a mini. The same charts, same movement, but 1/10 the size. Perfect for those on low budgets or just starting out learning or testing strategies. Charts, identical, but the money, not even close. A $100 move on a micro MNQ equals a $1,000 move on a mini NQ. Same entries, same exits, but 10 times the profit. So now you think, whoa, minis make more money. I'm going with minis. Hold up, let's take a look at a similar trade, but based on those sneaky institutions trying to wreck your trade. On these two charts, we're using the same entry, same stop, same setup. I wouldn't call this the perfect setup, but when you're learning to trade, you'll often find yourself chasing a trade. You know the feeling. It's close enough, right? So in this case, we're looking at a swing level breakout, a pullback, and then entering on the continuation just to show what happens to your account if the trade goes against you. While this plays out, think of it like going up against an alpha pal. When the market gets choppy, that mini contract will hit 10 times harder. You need more dollar strength to trade minis safely. Just like in Palworld, if you're facing an alpha, you better have the right gear. You can't show up in rags and expect to survive the battle. Micros hurt less. Every tick is still a tick, but instead of risking $5 a tick like on the NQ Mini, you're only risking 50 cents a tick on the MNQ Micro. That gives you the same chart, the same setup, just a whole lot more breathing room. So next time you're trading or gaming, remember, just because it looks the same doesn't mean it hits the same. Know your size, know your risk, and don't take on an alpha pal with a stone spear. In the beginning, I'd watch all these trading guru videos and they'd be trading NQ, Nasdaq minis, showing off their big wins. But if you're a noob, don't be tempted to trade Nasdaq minis. You can check it out in simulation mode, but don't be tempted to trade your real money, please. Just like when you're only level 35 and you check your map and you see a level 45 German tide, but go anyway. Then when you're actually right next to the German tide in the water, before going into battle, you best be smart enough to skedaddle. After you level up with micros, there'll come a day when opening micro trades feels like looting treasure chests way below your level. Not even worth the effort. So remember, same chart doesn't mean same risk. Micros are your training arc. Minis are alpha level fights. Know your gear. Know your gold pouch. If this helped you level up your trading brain, hit that like button. Drop a comment if you ever mistook a micro for a mini and lived to regret it. And don't forget to subscribe. Stay safe, stay sharp, and happy trading. And stay tuned for a little song I prepared on micros and minis.
Micros in my pack, taking baby swings, learning how to trade without losing all my things. Smaller stakes, but the lessons grow. You get to breathe while you learn the flow. Minis got muscle, earn fast cash, but one wrong move and your cash is in the trash. The gains are real, but the risks are vast. One bad trade and you're wiped out fast. Start out small, don't rush the race. Master your plan, soon you're trading like an ace.